Hey guys, it's James with the Chart Guys. It is Thursday, October 27th. Going to do my nightly review of gold. So gold, again, these nice moves up overnight and then boom, down by open. Nice move up again, down towards the open. We are close below the 20 MA hourly to close the day after we defended it multiple times here. The hourly, we did have this. On the hourly on the gold chart, we had this inside candlestick. So the high and low of this candle is within the high and low range of the previous candle. Then we had another one. We broke bullish out of it. I think it's also a 2-hour candlestick. That was inside candle. Yeah, so we had this inside candle, closed bullish out of it, but no follow through after. And I was watching that 2-hour candle on the bull break, and when I was trading JNUG again today for intraday trade. Let me remove this. This is useless. On the 5-minute, I was looking at the 5-minute chart, and right when I was about to make that break, JNUG was right here at the 5-minute 20 MA, and it was above it a little bit, and I took a position there just because it looked gold had, even though the 2-hour inside candlestick hadn't closed yet, it did break above it, so a little bit of a gamble. I took it, and I closed my position out right at 11.92, and the reason why I had that stop set as my profit taking was, if you look at the hourly, the 11.92 was right where the 200 MA was at that moment, and you can see it hit exactly 11.92 on this candle and started fading again. So that's the importance of utilizing technical analysis, where to make entries and exits. Look at all different time frames. I always look at different time frames. I look at the 1, the 5, 10, doesn't matter, all the way to the monthly chart if I have to. I think there are some more miners reporting in after hours. I think Ego had a bullish reaction here, right at its 200 MA on the hourly. This again is on crap volume probably. Let me see what the volume is on this move. Yeah, that's this right here. So that's on 1,000 shares. Doesn't mean anything until open. NEM, another miner, had bearish reaction. It did see some buying into the end, but you could see this. Look at this price, this bear volume coming in towards the end as it sells off. So keep in mind that miners are weak. Again, I always emphasize you just play whatever has hourly 20 MA support. So as soon as we lost the 20 MA support, I don't want to use NEM as an example because I had bad ER. So 20 MA support, rejected, downside. So if you rejects, you want to play the bear miners. If it holds that support, you want to play the bull miners. If you look at dust currently, you can see once it got the 20 MA, it just flew up. And a way you can do it is, well, if I wait for this candle to close, I'm going to miss this entire move. What you can do is you can take a position right at the 20 MA if you see the price poke above it, and your stop loss would be the low of the previous candle. So your stop loss on dust would have been the low of 39.09. Your entry would have been around 39.77. It keeps your losses from being too big and your wins to have some really good gains on the upside. So on the hourly, you can see where dust is rejecting. It's rejecting at the hourly 200 MA. So if it's unable to get above that tomorrow, then you can play bear miners, just a theory. And if it gets above that, then the play will continue to be the. If it rejects from that, you can play the bull miners tomorrow at the 200 MA. If it gets above it, then that could be an entry for the bear miners again. I would wait until this 200 MA catches up, which we'll probably do overnight, and see how it reacts to this. If it rejects from this and breaks below the 20 MA, that's your clear key signal to get into bull miners. So, and if you look at US dollar index, so US dollar index, I explained this on my oil chart. I have this daily channel that I've had this up for a long time, been watching it for a while, and you can see that rejected right at the top of this channel, bounced at the bottom, got below it but closed above it, rejected at the top. Right now we're right at the top of it, and what we have tomorrow is GDP numbers at 8:30, And bad GDP numbers, I'm expecting the dollar to reject again at the top of the channel and come down. And that would be good for gold and other commodities. But we could also see a breakout from this long-term consolidation of the US dollar after this. Really, so you see this big bullish move, and it's all it's been is really just some consolidation here. And you can see a breakout. I'm kind of leaning towards a bad GDP, and the reason I say that is just because of this oversold RSI on the daily. With the RSI that high, I find it hard that it's going to break through. It could break above and drive all the RSI all the way up past $80. I mean, I'm sorry, 80, not $80, 80. And then you'd see some consolidation to come back and retest this channel downtrend line and go higher. But if we reject there, that would be a good entry for maybe mid to longer term in some commodities, especially particularly gold. So keep your eyes out on the GDP. Keep your eyes out on reaction to the US dollar index to that GDP news, and see where gold does. And honestly, gold, if you look at the weekly chart, you can clearly see the rejection here at the 200 MA, which is currently at 1275.50. So I really do believe that gold bulls need to show up ASAP and close above 1275.50, because this is starting to look like a bear flag if bulls aren't able to get above this 200 MA here at 1275.50. So key tomorrow on Friday is that we close above 1275.50, see weakness in the US dollar on the rejection at the top of the channel, and bad GDP. That's going to be the driver for fundamental driver for and technical driver for playing miners and which direction you want to go. And you can see after this big move, so far the volume's been declining, and that has all the classic signs of a bear flag here. So eyes on the weekly, eyes on GDP, eyes on the US dollar index. Have a good night, and I will see you tomorrow.